Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. Real estate investment trusts, or REITs for short, have struggled in this high interest rate inflationary environment due to higher debt payments, upcoming maturities, and tight liquidity in the banking industry. REITs are also facing headwinds as a result of demand for commercial properties dwindling. Fortunately, for companies like Lamar Advertising Co, traded on Nasdaq under symbol LAMR, not all REITs are created equal. John?
Yeah, thanks, Mo. Yes, exactly. When it comes to REITs, most people think of mortgage, retail, office, and residential, but there are a large number of specialty REITs that don't fit into that neat package, and this includes Lamar Advertising. Now, if you live in the US or Canada and have ever walked around outdoors in an urban setting or driven a car down the highway, chances are really good you already know who Lamar Advertising is. You just don't know you do. Rouge, Louisiana-based Lamar Advertising Company is one of the largest advertising action companies in North America, with approximately 361,000 displays across the US and Canada. The company's advertising channels include billboards, interstate logo, transit and airport advertising formats. It's also home to the largest network of digital billboards in the US, with over 4,600 displays.
Given how there's social media, everything is on the internet, and so on and so forth, why use this old school method of advertising?
Well, because it works. Through billboards, advertisers can capture the attention of their audience 24/7. Digital billboards, meanwhile, have taken outdoor advertising to a whole new level, allowing clients to change or rotate slides every few seconds, stream live data, or change the message actually in real time. Transit advertising, meanwhile, is a moving billboard that gives customers exposures to local commuters, drivers, and pedestrians. With airports, you're getting a message in front of hundreds of millions of travelers every year. And those types of ads are really successful. According to one recent study, 42% of frequent flyers visit a website or store after seeing the brand's airport ad, while 90% are likely to shop at a brand's brick and mortar location after seeing an airport ad.
Now, John, let's dig into numbers now. How did Lamar do in the third quarter of this year?
Well, thanks to resilient economic growth, Lamar Advertising continues to report solid financial results. For the third quarter ended September 30th, Lamar announced that net revenues increased almost 3% year over year to more than $542 million. Operating income was up approximately 4% at $188 million. Net income slipped approximately 4% to $141 million, or $1.37 per share. The decrease was mainly a result of increase in interest expenses, which is something, frankly, that many businesses are dealing with. The all-important cash flow from operations was down slightly to $22.5 million, while free cash flow was actually up around 3% at $181 million. And of course, the all-important funds from operations, they inched up 1% to $210 million, while adjusted funds from operations grew 1.2% to almost $209 million, or $2.04 per share.
And for yield hogs, Lamar increased its third quarter dividend to $1.25 per share.
Yeah, Lamar Advertising's strong North American footprint helps it generate reliable revenue and earnings, and that's why it's able to provide investors with reliable, growing ultra-high yield distribution. In fact, before the 2020 health crisis ravaged the global economy, Lamar had actually raised its annual dividend every year from 2015 to 2019. Now, it cut its quarterly dividend during the pandemic, but that was short-lived. In the first quarter of 2021, it raised its quarterly payout to 75 cents per share, then again to $1 per share in the third quarter, and that's the same level it was at before the 2020 health crisis. Lamar's actually raised its quarterly payout 3 times since then. This past March, it raised its quarterly dividend to $1.25 per share. That's up from $1 per share in the first quarter of 2022. Lamar's actually held its distribution at that level since then. This works out to an annual payout of $5 per share for a pretty frothy yield of 5.02%.
And let's talk a little bit about LAMR stock as well. How is that doing?
Now, lots of times we say that high yield dividends can help shareholders weather market volatility. And it can. Fortunately, though, for Lamar Advertising shareholders, they haven't needed a lot of shelter. For the most part, LAMR stock has been rewarding buy and hold investor for years. In fact, Lamar stock performed well from 2009 to the start of 2020, climbing, I think, around 907%. And that momentum was only thwarted by the 2020 health crisis. But even that pain was short-lived. By February 2021, Lamar had erased all those losses associated with the early 2020 sell-off. And in January 2022, it hit an all-time record high of $113.37 per share. While it's given up some ground, it's been on the move since the start of November, rising approximately 22%. One reason that it's been fairly bullish since then is that it reported strong financial results on November 2nd.
I think it's worth mentioning as well, and I think it's important worth mentioning that on November 1st, the Federal Reserve said it would keep its interest rates between 5.25% and 5.5%.
Yeah, exactly. Now, the Fed did not rule out another rate hike when it meets next in December, but Wall Street seems pretty confident that the Fed is done raising its rates for this cycle.
A pause in interest rate hikes and lowering of inflation means U.S. economy is probably going to avoid long-promised recession. And a strong economy means many small and medium-sized businesses will be looking to Lamar to help ramp up their advertising.
Yeah, and this should help juice LAMR stock over the coming quarters. Even conservative Wall Street is on board, with analysts providing a 12-month share price target of $112 per share. That would put LAMR Advertising once again in record territory.
John, thank you so much for your analysis. Just to recap, LAMR Advertising Co. is a specialized REIT with a leading position in a lucrative niche market. One of the largest outdoor advertising companies in the world, LAMR experienced a slowdown during the health crisis of 2020, but business activity has begun to normalize since then. There are definitely challenges, but LAMR reported strong third quarter results in spite of choppy economic environment. This includes AFFO of $208.8 million or $2.04 per share. AFFO is a key profitability measure for REITs. The industry is still recovering, but management expects LAMR to reach or even exceed the upper end of its full year AFFO per share guidance. This bodes well for LAMR Advertising stock and its growing ultra-high yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 dividend stocks to own today. One of the stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.